Okay, looking over at the vol side of things, realized vol did remain in the mid 30s last week across both of the major coins, as non-farm payrolls provided, more action more action in stocks. Yeah, exactly. Provided much more action in stocks and little reaction in crypto. Since then, Binance obviously was the catalyst for the drop, and we did get a pop in realized. So you can see the yellow line is our 10-day realized vol. It was drifting slightly higher, but it had its pop finally there on that 5% move. But notice that implied vols in the 1 month and the 1 week has the green line has moved up, the white line's barely budged, right? So whilst 1 week vol has popped, 1 month vol doesn't really care about the 5% drop in markets. Okay. And that's interesting because it looks like most traders in the options market are basically expecting this reaction to be short-lived and not create a major downdraft in crypto markets. Carries obviously back towards neutral, slightly negative to neutral, as we saw that kind of convergence between implied and realized. Positioning is also likely to be a factor, preventing any major vol spike, because dealers do appear to be getting long vol around these levels, which we'll show in our gamma positioning in a few slides. We'll probably need to see a break of 25K to induce on Bitcoin to induce some larger option buying flows, because that would then be a bit game changing in terms of the technicals. Okay, and then with the debt ceiling behind us and the TGA rebuild set to start, the liquidity picture should act as a headwind to any upside moves. So now the way the equity markets have responded, they're either saying, well, we know the liquidity issues, we don't care. It's already kind of been priced in or factored in, but we do think crypto is a bit more sensitive to liquidity, whereas equity's got loads of other drivers. And therefore, because of that fact that the TGA has to be rebuilt, there probably is some sort of liquidity drain. It's going to be hard for crypto to then break through those January highs, we think, in the near term. So we would think there's going to be a bit of a lid on crypto. That's not to say that we think crypto necessarily breaks down below those supports, but it probably just means we're going to stay range bound for a while. And that's certainly what the vol market seems to be implying. Okay, looking at term structures, we saw pretty much a parallel shift in Bitcoin. So you see the white line down to the green line. It was a bit of a two-step process, though. We initially saw the contango, so we did see the front end drop a bit more. But since the 5% drop, we got the weeklies pop back up, and we left the curve relatively the same shape, but just shifted down in terms of vols across the curve, right? We're looking at Ethereum, similar sort of move in most of the curve, although the weekly is not moving quite as much. So the weekly is holding up, which is why we're seeing a bit of a inversion back again coming into the vol spread ETH Bitcoin, where ETH was trading 2.5 vols under Bitcoin last week in the front end. Now it's back to 1 vol over, because the ETH front end hasn't come down as much as Bitcoin front end has. Okay. Now we do still think value is probably in that longer part of the curve, where we see almost flat to BTC vol in the 6 months and longer. Obviously, this is the long-term chart of the vol spread, so it doesn't tend to stay at zero. It usually lives 10, 20 vols over, but there may be structural reasons now why ETH doesn't reach those heights for some time, because we've got large structural upside selling flows that continue supplying vol to the street and are having a disproportionate impact on the ETH vol, because those flows are so big, and the market makers who take that vol down have a limited appetite of how much vol they're willing to hold, right? And so that's what it is the moment those flows are just overwhelming what the market makers are wanting to carry. And because the market isn't realizing enough, the theta bills are getting too big and the vols just keep getting drilled again and again and again. Okay, so that's what we're seeing. At some point it will change, because ETH will come alive and there'll be a story and it will like move like 20%, 30% in a week, and people will suddenly be like, I want to own the vol again. It's way too cheap at 40, 50. But right now we're not in that environment, and we could stay in this environment for quite some time, heading into the summer maybe. Okay. SKEW wise, with implied vols failing to react materially to the drop in spot, we have seen some firming up of put SKEW. So BTC SKEW is currently in put premium. out to about 3 months, and then it goes into call premium in the back end. So that's kind of a stable state in terms of the back generally trades a bit more towards calls, particularly in that 6-month area. ETH SKEW is more uniform across the put side. So about 3 vols for puts over whatever maturity you want to look at. And then in the near term, the put premium definitely does make sense, because as we approach the bottom end of that range at 25K and 17K, if those levels break, then that could induce a bit of a panic to the downside as we open up a lot more room to lower levels, and then vols may well actually have a reason to spike. Okay, so it makes sense people bidding a bit for that downside below those support areas for protection in the near term. We could see that happening in terms of a real reaction in vol that we haven't seen in quite some time. We do think put calendars could make sense here, as we think medium-term downside vol is quite cheap, and the front-end shorts, you could use the fact that the curve is flatter than you would normally expect it to be on such low realized. You can use that flat curve to kind of sell shorter dated downside to own medium-term downside, and that way you fund some of that theta bill, you fund some of the carry, but you own Vega at what looks like quite a cheap level from a mean reversion perspective. And by doing it on the downside, you're probably a bit safer, because the supply keeps coming on the call side of things, right? The supply of vol selling that keeps coming in size is all upside calls in the 2200, 2300 area on ETH, things like that. So if you're owning downside at like 1400, 1500 on ETH, there's no natural supplier of that coming. So that vol doesn't need to get as crushed. And that's why we're seeing put SKEW holding, because the selling pressure is coming to the calls. The puts are drifting down, but by not as much. And that's why the put SKEW is steepening, basically, right? That's how that dynamic works. Okay, looking at the strategy compasses, obviously we're in buy calls territory now, as spot has broken down below the lower Bollinger here, and vols are obviously on their knees. So, and carry wise, we are actually small negative carry in Bitcoin. So looking at outright calls in Bitcoin here from a mean reversion perspective does look good. We, like I said, because of the liquidity picture and stuff, we don't see tons of upside. And we'd probably want to wait a little bit for the market to get even closer to the bottom end of that range, and maybe even have a little overshoot through 25 before buying anything. But just blindly from the stats perspective, it doesn't look like a bad entry point here. Looking at ETH, pretty much telling us the same story. Carry's a bit more neutral there, but look at that vol. 1 month vol on ETH at 36. I mean, that's as cheap as it gets, right? Like, it really doesn't get a lot cheaper than that. So, no harm in dipping your toes in if you fancy a rally, basically. Okay, option flows. This were a bit lower this week, as lower vol tends to bring with it less activity. The large clips in terms of the block trades were these calendars being sold, right? We've been talking about the calendars getting sold for weeks on Ethereum, starting to be mirrored on Bitcoin now. So the big clips that we saw were these July, September 31K call calendar, and the September, December 34K call calendar. So this is selling. Generally, the idea is that people are already short the front leg, they're buying it back, and they're selling the longer maturity, right? And they're just rolling their short vol, their short upside vol trade, because they're large holders of the underlying asset like Bitcoin or Ethereum, and they're just overwriting it to capture and harvest some premium against their long holdings, right? So it's a call overwriting strategy that keeps getting rolled and in really quite large clips in the market, and it keeps supplying Vega to the street. Okay. Other flows, we did see a bearish risk reversal in 30th of June expiry, this 22K, 30K risky. And then we also saw some strangle sellers in 9th of June expiry as a bit of a theta management exercise. So those are the main flows in Bitcoin. Over in Ethereum, still dominated by call selling, keeping pressure on the vol. Large chunks of calendars again sold in July SEP deck. This time the strikes were, like I said, the 2200 in July SEP and the 2300 in SEP deck. That's what we saw, and we saw those in big clips, talking about more than 20,000 options at a time. And then later in the week, we saw some naked call buying. So we saw 16th of June and 30th of June expiry, upside calls getting bought, 1900 strike all the way up to 2200 strike. On the downside, very little activity. There was a bullish risk reversal bias, so we saw a seller of the 18 puts to buy the 2,000 calls in the short dates in 30th of June as well. And then on-screen activity was generally call selling again, that front-end call selling, putting pressure on the vol, which is why we've got mid-30s implied vol in ETH, which are levels that we have not seen for a long time. Yeah. Okay, gamma positioning. So both of them are in a slightly positive gamma here. You can see that by the fact that the blue line is above the zero line. So we've got Bitcoin here, ETH here. Obviously, I had a massive drop last week in terms of ETH dealer gamma, but it's just kind of stayed where it is, drifted very slightly higher. Looking at the makeup on the strikes, you can see that dealers seem to be long the 26, 27 area for this Friday. As we go higher in Bitcoin above 28K, dealers would flip a bit shorter. Looking at Ethereum, though, we've still got the big 30th of June 1800 strike, probably creating the majority of the gamma here. But on the upside, whilst we did see a bit of a flip on the upside last week, because we keep getting given some shorter dated upside in the 16th of June, in the 9th of June, and even in the longer dates through those Septembers, we think that the positioning in ETH is going to be a bit more stable and won't flip short on the upside like it maybe would have done last week before the flows that we saw this week. Okay, so generally that's what the setup looks like. So still, if we do rally, it looks like Bitcoin flips shorter faster than ETH does. All right, that is my crypto weekly summary for the week. Thanks a lot for listening, everyone. Catch you all next week.